Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade episode for March 1st, 2022. We are recording this at 4 p.m. Eastern Time, and this is episode number 189. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be talking about your trade ideas. So I have arranged for the option professor to be here, and he's going to be doing a solo episode where he's going to talk about the symbols for today, and then also add some of his own analysis and trade ideas and picks. So I'm going to go ahead and turn it over to him.
Okay, thanks, David, and welcome everybody, and good to have you with us. Another volatile day on the street during this wartime activity that we're seeing. Basically, as an introduction, I'm the option professor. I've been in the industry for decades, and I've done hundreds and hundreds of seminars on the uses and risks of options nationwide, and have helped thousands of investors understand better the uses and risks of options. Today, I'm going to be going over what my opinions and my observations are, and I'm going to be giving you my feelings on different markets and different things that are happening. But what I'm not giving is advice. So when you want advice, you go to your broker, you go to your brokerage firm, you go to your advisor, and they know your suitability, they know your risk tolerance, and you guys decide what is right and what is not right for you. Today, I'm just going over information and stuff that I'm seeing, and I'm going to share my views on what I'm seeing. Okay, let's get into it here. I'm going to give you some macro stuff on the S&P 500. Our view has been that since the 4,800 top, that we would have this year, 2022, a reversion to the mean. That's our main talk, reversion to the mean. The first reversion would take you to 4,400, which we already did and exceeded, right? That's the 1-year SMA. A full reversion would take you down to the 24 SMA and the 36 SMA. So that's why when people say it might go to 3,800 or 3,600, that's where they're getting their numbers. RSI right now on the 20-year is still strong in the area of 62 on the 28, which is the one I follow. And so basically you're looking at still a bull market, but a bull market that is still correcting. Now, if you turn to shorter term averages, you're going to find that they don't look quite as good. This still looks like everything is uptrending, albeit it's broken the short term there, the 1 year. But if you turn to the 5-year, that doesn't look so good. It looks like they're all crossing and they're in the process of crossing. So if we cannot get above 45.50, and it stays under here, the longer it stays under here, these moving averages will come down and down and down. And your RSI right now is hanging on for dear life at the 49.50 area. So if it starts going 45, 43, 40, then you're probably going to get that 38, 3,600 number. If it turns above 50, 52, and we take out 45, 50, then I would be, well, the first number is 4,400. Then the next one is 45.50. Then I would be willing to go into the camp that these people who think 4,800 and 5,100 and 5,300 by the end of the year might make some sense. But as you can see, the train has to go through my towns before it gets to their town. And if they can't get through my town, I don't want to be waiting at the station up here at 5,000 for something that never occurs. So basically, that's the way I am seeing the S&P right now. Obviously, it's having another rough day today. But again, you know, this is all about liquidity, and it is all about valuations contracting. The earnings obviously are there. You know, you saw that. Of course, they're backward looking. Don't forget, Q4 is not Q1, but they are good. And some of the guidance has been very good, but a lot of stocks are still having trouble because they're concerned that for $1 of earnings, this year, they may pay a lot less. Now, some of these quant guys are on TV and they're saying that they believe because the Fed cannot hike rates aggressively this year, in their mind, that valuations may even expand back out again. And that's how you get to the 5,000, 5,300 numbers. If that happens, earnings stay strong, the interest rates stay low, and then the valuations pop back out, 100% they'll be right. But when it gets to 4,400, I'll start listening. And when it gets to 45.50, I'll listen even harder. Okay. But, you know, everyone has a viewpoint and everyone's crystal ball, you know, either cracks or it's good. So basically, after decades of doing this and meeting more investors and more analysts than I'd like to admit, my view is the proof's in the pudding, and the proof right now is this thing is going down, and this thing is, got a chance of going down to 38, 3,600. And I respect that risk more than I'm worried about the greed of it possibly going to 5,300, because that's a train. There's a lot of real estate between 42 and 40 and 5,300 or 5,000. So you'll be able to get on it. But now every time you wake up and your account is lower, that's not a good place to be. Okay, so there's my view on that. Basically interest rates, if they come out dovish, you could see the 10-year at 150. It was at 2% just the other day. So that tells you what the 10-year is doing. And with regards to inflation, come on, CPI, PPI, PCE, I'm running out of letters, right? They're all going through the roof. So that creates a scenario that I'll get into later as well, because, you can't have inflation running rampant and have interest rates at zero without some casualties or some, let's call it consequences. Huh? Okay. So anyway, I'll get into a lot of stuff that I'm following, which I think you'll find interesting. And then right now, let's get into the stuff you guys think are interesting. FTNT. I'm sure a lot of these stocks are going to be going down. So I don't know what I'll be able to tell you other than they're going down. Maybe you'd want to step in front of them. Let's see. Okay, here, where do you have as a little bit of a line in the sand? Well, on the 5-year graph here, you got the moving averages coming in where? Right around 319, 320. Okay. And then you got one down here at 310. So once this thing got underneath the 280, and then it gets back above this number, which is around 310, that's where you'd get in. And then you're up here and you could move your stop up to 320 or leave it at 310 or sell calls at 360 and hedge yourself. Okay. But obviously, it doesn't look that bad on a longer term basis. That's a 5-year graph. RSI right now is at 60. And I'll give you a little tip on RSI. If it gets above 60 and starts going 63, 67, you'll accelerate to the upside and you'll probably blow out 360. However, if this thing goes from 60 down to 55 and then under 50, then you're at risk for blowing out the 310 and maybe even testing those lows again. Obviously, this company here has a lot of things going on right now with the geopolitical situation. So obviously people had got interested and that's why it spiked up. But that spike up, was way up there at what? 325 and excuse me, not 325, but make that 350. 351, and we already lost $14 off the high. So let's take a look at what it looks like on a shorter term basis. The 1 year. Okay, it's back up here. Like I say, this 310 neighborhood is really your area you want it to hold, right around the 310. Look at it on a 1 month basis. You get your buy signal here at 310. That seems like a big number. So whatever you're doing with this stock, be careful around 310. Right today, it hit this number here on the monthly. So let's hope it holds. If it doesn't, it opens the door down here. So if I was trading this stock, I certainly wouldn't want it underneath 334. Okay. And the RSI is at 58, which is a good number, but it's a good number if it's going to 62 or 63. If it starts reversing down, then you can count on the 310, 315 probably coming back into play. Already had a nice pop though. Already had a nice pop. And like I say, only time will tell. But it already from 275 to 350 is a $75 move. Okay. And again, I believe this is probably a high valuation situation. So the skirmish got it to get going and now it's fading back a little bit. So we want it to hold 334 if you're a short-term trader. And if you're a longer-term trader, 325 to 310. Okay, let's go to the next guy, SNPS. By the way, if you have any questions, because I'm going to be going over things briefly. If you'd like to talk to the option professor, real simple, email us optionprofessor@gmail.com. So copy your questions down that I'm not getting to, put them in an email and some contact information, and we can talk about those after the meeting. All right, this guy here is also back in the tank after having a big move, but let's see what it looks like. I think it's probably enough. Well, it's been around for a while. Yeah, I guess it has been. Okay, this thing had a big blow off top at 380. So people are wondering if it's time to get in. Again, you got to have a belief in this kind of thing in that, do you think we're going to have a full reversion to the mean before we rally? Or do you think it's just going to go to the initial areas? So if you think it's only going to the initial areas, which would be 4,400 ballpark on the S&P, and here we're at around what, 300, If you think that's all she's got in it on the downside and this 280 was just a mistake, then obviously you might take a bite out of it here and just use 305 or so as your line in the sand. Because if it breaks, it opens the door for 260 and 220. RSI right now, and this is at 66. That's a high number. So that means if it's really strong, it'll start blowing out 320 and get going. And the RSI can remain high. So, you know, you're at a point here where this thing's had a big drop, and obviously people are hoping that's the end of it. But where do you put your stop? Where do you put your cutoff point? If you don't have a cutoff point, then you're just like a feather in the wind, getting blown wherever it blows. So risk management's a big key, and I'll get into hedging after I get through some of these stocks. But yeah, I mean, right now, if I was in this thing, I certainly wouldn't want it underneath 305. I'd be happy it broke above it. As you can see, it really has to get back above 320. And as you can see, you know, staying above 300, like I said, 300, 305, and then getting back above 320, you can see is very important here. RSI on the daily is at 47. You'd like that to be back above 50. You know, as you can see, it's been trading under 50 and the market has not been doing very well. So if you want this thing to start looking like this, you know, the old May to November of last year, then you got to get that RSI above 50 and keep it above there. Okay. So, you know, some of these things are having snapback rallies. And like I told people in my report, you know, a bounce is not a trend. So be careful. And as you can see this week, you know, you're getting whacked if you thought the bounce was a trend. Okay, next one up. Let's see. Oh, QGEN. These are not all on my radar, so I'm giving you basically the technical setup. If there's a fundamental story behind it, I'm not aware. So I'm just giving you the flow of money, the technicals. If we go back 20 years, what do you got? We have got an uptrending market, and as long as it can stay above this blue line, which is at 45 ballpark figure, then I think you can remain somewhat constructive. Obviously, it's concerning when it breaks under these two, but your RSI is still above 50, which is what, 55? That's not too shabby. And the trend is moving up. And the only time it really broke it was back here in 2016 when the market got real sloppy, kind of like it is now. And of course, during the crash of 2020 and 2019. Okay. So the bottom line is that technically this thing looks good as long as we can stay above the 45 number. And if you turn into the 5-year graph, yeah, again, getting back above 52. So if you had it here, you'd want it to stay. And look at this. You can see if it breaks under 45, 46, it'd be in big trouble, more than likely. Right now, your RSI is at 48. So again, you got to get that RSI above 50. And then it is running into the 12 SMA, and that's coming in at around 51 bucks. If it gets through there, then it's got 52 ahead of it. But again, the good news is on a long-term draft, you do have a net coming in around 45 bucks, 45, 68, 46. That's the reason why it stopped there. Okay. And on the 1 month, again, rebound rally. Obviously, this is benefiting for whatever reason. Could be cyber. I'm not 100% sure, but it's probably cyber or something to do with cyber, maybe, or Bitcoin, you know, crypto, because those are the things in this kind of a situation that might be doing better. Okay, next guy up is EFC. And let me do this here quick. Okay, ELC, let's go out 20 years and see what it looks like. Okay, EFC, EFC. Right now, I guess it hasn't been around that long, so let's shorten our time frame. 5 years. Yeah, better. All right, this one looks like it. Obviously, it's a financial. Financials are getting whacked. If obviously they're whacking JP Morgan, they're going to be probably hesitant to get into this one. With regards to, let's see here. Yeah, they're in Greenwich, Connecticut. Basically, since 2000, they're in a financial operating partnership. So obviously, they are into things that I'm not familiar with. I'm not familiar with the company, but if I was looking at the technicals on it on a 5-year basis, you certainly want this thing above $18, and you certainly don't want it under 17. So that's a pretty tight window. Above 18, I would be much more happy with it, and closing under 17 would be not very good. And you're right on the ledge at 51. So if it does take out 17, I don't think these little stems, these little wicks here are going to do much for you. So again, if it drops under these with cause, I'd consider some hedging tactics, which I'll get to after I go through some of these stocks. Okay, so there you go. And let's look at it on a 1-year basis real quick. And you can see you got to get it above 18, then you'll be onto something. RSI right now is at 50. So again, this is going to be a one to watch. And go with the flow might make sense. Sometimes going with the flow like here is not a good idea because it tanks right afterwards. So if this thing can trend like it was doing here or doing over here, you're in better shape. I think if it started to get above 18, the thing might trend because again, this is a big consolidation. So those are my lines in the sands with EFC. MIME. MIME. Wow. That thing's pretty flatlining. This is a Jersey domiciled UK headquarters specializing cloud-based email. Okay, so this is cloud. The two things people are going to start taking chances on if they think the rain is done is going to be cyber and cloud. So both of these are interesting because these are industries that are growing, right? So I understand where you're coming from here. What I can't understand is why the thing's been flatlining, it looks like, for a year. Where, in December, well, let's go all the way back here. In December of last year, it was trading around 79, and here we are, and it's still trading at 79. So I don't know the backstory here. There probably must be one because it's flatlining. But again, it is in an industry that has interesting, let's see, on the 5-year. Okay, so that's a better chart. Yeah, on the 5-year, but it's still showing that big distribution. It's on the ledge here, right? But it's at a high PE. So the high PE is a good thing from the standpoint of it's very strong, but it also is had a move, went from 40 to 79. So it's double in price. But again, this is an industry where things can get hairy. So if they have something people want, it could be a very good situation. Personally, I would like to see it above where it is now. So I don't want it slipping. And then I certainly want it above 75 and 70. If this RSI starts breaking under 60, obviously it's probably because it's going to go test these areas. So these are your two lines in the sand, and you might want to keep some powder dry for that. On a 1-year, well, that's the one we looked at, yeah. And I don't think it goes back that far. No. So the 5-year is the better one for that. On a 1-month basis, if you're a short-term gambler here, then obviously staying above 79.50 would be the way to go. And you certainly would like that RSI, which is at 52, to start climbing. So as you can see, as I said, above 79.70, above 80, then you might be onto something. This could be something that would be better to get a little bit of direction out of because that's a long time flatlining, but it's in a good industry. Okay, DDOG. I've heard of this one. This is definitely one of the old home high flyers. Let's see what that's been doing. DDOG, let's go back 5 years and see what kind of nightmare that had been. Okay, well, not too bad. It had a nice run from 70 to 200, then it came all the way back to 120. Again, I'll give you a little tip here. When the blue line is rising, that's a good thing. When it gets penetrated, that's not a good thing. But once it gets right back above it, that's when you're supposed to get back on the horse. Okay. And as you can see, if it doesn't close underneath it, that's a strong sign too. So again, let's look at the 1-year on it. Again, this is curling up, which is good. The 24 SMA is looking okay. Your RSI is right on the ledge. So you don't want this thing coming down here and blowing out 150. No way. If it does that and your RSI gets back under 50, if you notice when it's under 50, that's when you have trouble. So again, this number here, 48, 150, and then a little bit higher here of 155. those are the numbers you want to get going. If this is a pullback, there's a gentleman who we work with who believes that when you have a run like this and then you have a pullback and it starts going back up, it could be going after that high. So if you're bullish, I'm sure that's what you'd like to hear, is that it's going after that high. Here, you might want to stay bullish unless you break on or wait until you close above the one SMA, which would take you at 162.50, and then see if it'll jump up there and go after that high. So this is not a bad formation if this thing is going to have legs. If this is a dead cat bounce and we're going right back in the soup, then you can forget about the rest of the formation. Okay, REGI. Boy, you guys are really hitting the mystery list on me here. Of course, I'm not interested in stocks that are going down, so that's probably one of the reasons I'm not familiar with some of these. This is having a pop, though. Renewable energy. Not a bad industry, right? But pretty lousy stock. 115 dropped all the way down to 35. So obviously we're trying to see if we can bottom fish or catch a falling knife without bleeding to death. And right now, obviously it has established a little bit of a low here at around 32.50. So that's your line in the sand there. It is above the first one here, which is at 42.67. 42, yeah, okay. 42.67. So it popped today. Okay, I'm with you. Yeah, it popped. Let's see if it's going to follow through. Obviously, this just came out of the blue. So somebody must be either buying this company or they must have done some big news today, because for whatever reason, it went from a dog to a prince. And so I don't know the news on it, but I'm sure there is some news on it. But what does that mean, though? Let's see if there's anything we can see. Is it a long-term company? No, not really. So basically, it's gotten up here to 60, which is a former high up here, right around 67. And I guess we'll be very interested to see how it follows through tomorrow. If it was a buyout, you have to know where they're going to buy it out and what the terms are. And will it pass muster with the board and the shareholders? Yeah, because that's just an out of the blue pop, but it wasn't out of the blue. You see, once they start getting above the 12 SMA and the 24, you are getting buy signals. Okay. And if you're this far down from where you were and it gaps up, a lot of people say what gaps up goes up, what gaps down goes down. So you had a gap up, which is very strong. It got above the averages here. So if I was into this thing trading, I absolutely would have been buying it with stops underneath the red line. And then would I have gotten paid today? Yeah. So this is a good company as far as the way it technically set up before it happened. Now the question is whatever news drove it there, will it be able to sustain and will it follow through? They're in Ames, Iowa. They got 12 biorefineries and feedstock processing facilities. So obviously the renewable energy story is big because of all the problems we're having with Russian oil. That's the story. Okay. Next one is Palantir, which was another darling that turned out not so good. So let's get some Palantir up there. PLTR. Hang on. Yeah, they supposedly, because I was in them when they were hot. They supposedly had contracts with the government and they had not a big sales force. That was a big knock on them. But they had, a way of scanning data and, was very, very popular. As you can see, this is when I was interested in it, in these runs here, and then a pullback in these runs. But after that, that was pretty much it, because once it broke underneath 23, it was sayonara. Actually, when it broke under 25. So the bottom line is this thing's been in a downtrend for a long time. Now, with all this cyber stuff going on, will these guys pop like that last stock did? Well, it's possible. But let's say right now, you'd want it to stay above 12 bucks. So, if you're in there taking a shot, I would definitely want it above 12 bucks. I certainly would like it above 13, and I would become very more interested at 14. There's your shoulder. There's your head. Maybe it'll form another shoulder, and then maybe a little further down the road, it might give you a break. Right now, though, the RSI is still at 40, which is, not bullish, but, obviously a little oversold. The RSI has been rising because you can see here the RSI was at 31. So money is coming in. Money is coming in. Let's see what it looks like on a 5-year. Oh, this thing hadn't been around long enough. So anyway, yeah, is it starting to set up a head and shoulders bottom? It's possible. There's your head, the neckline right there at 12. So that's why you don't want it getting back under 12. It could pop up towards 14 and then go back towards 13 and create another shoulder and then maybe go up later. But unless these guys are going to get some kind of news like your REGN, REGI did, you know, it's still in a downtrend. But if you want to take a chance, if you're specking, you know, you got the first sign to go in when it broke above 1213. Next sign would be 1265. And then, of course, 1350. All right. Next boy up here is Mara. Marathon Holdings. Okay. Anything energy oriented is obviously going well. And let's get a quick take on this one here too. Okay, so it's it's cryptocurrency. There you go. It's the largest publicly traded cryptocurrency mining firms. One of them. I guess Riot is the other one. Let's take a look at Riot. Okay, so these guys are mining, and a lot of the mining has gone to the U.S., which is supposedly very good. And so a lot of people are thinking Silvergate and the miners are the way to go. So keep an eye on this. Yeah, it's coming out of a double bottom, which is great. And yeah, it's above. Like I say, if you're speccing, you want to get in early. Then if you want to get in early, as soon as it breaks above 24.56, that's your first hint. Above 25.18, that's your second hint. And now the thing is up here. So if you're a specker, you should be in. And the RSI is still under 46. So obviously, if that RSI is going to break above 50, we're going to be going after that 30 and change. And there's a lot of real estate up here if the winds of change actually blow. Little too early to say. But if somebody said, what would you do with this thing? I would obviously be on the buy side. And I would be very much hoping that now this thing might be worth taking a look at options. At least with call options, you got a limited risk. Bull call spreads or calls. And then maybe go out in time. You know, go out 6-12 months, see what they're priced at. Because if it goes, there's a lot of real estate. And if it doesn't, you know, who's to say it's not going to go down to 15 for all we know? So the bottom line is that this is something that might be ripe to do because, you know, again, you would imagine the calls down here in the 20 to 25 number were a lot cheaper than they were up at here in 80, right? So again, the other thing, if you have enough money in your account to buy the company, you could do a sell, put, buy, call strategy. But when you sell a put, you have to have the money to buy the stock if it's put to you. If you don't understand it, don't do it. If you're wanting to know if you're suitable to do it, talk to your brokerage firm and see if that is something that would be up your alley. But that would be another strategy that I would consider if I was looking at this thing. But let's take a look at Riot and see if it's in the same ballpark. Because Riot was way high and it came down too. Okay, so you got Riot in the same. It's a twin brother here. So you want to have Jekyll and Hyde or Hansel and Gretel, whatever combination, Abbott and Costello. These two both look like they're in the same boat, and that boat is they're trying to turn. And if they break above their resistance, the other one was at 30. This one's around 20. They've got some real estate to go. So if you're a believer in crypto, this would be the time to keep an eye on it and maybe take a stab knowing you're speculating. Okay, so there you go on those two guys. Let's go to the next one up is CDNS. CDNS. All right, this is Cadence Designs. And this is another one that was in the tanker here from 190 all the way down to 135. It made a new low. What did the RSI do? RSI did not make a new low. So that's a little bit of a divergence. Again, we're trying to, these things are just beginning to get above these numbers. A lot of times after they do that, they sometimes can come back and forth, but other times the first signal you got to take because these are very volatile stocks. And if you wait too long, it already makes its move. You know you're speculating in this. You know you're taking a gamble. Okay. So since you know you're gambling and you know you're specking, obviously you know you're taking high risk. So once it gets above where is this? 144, that's your buy signal. So you should be in. Now, right now, you'd love to see this thing stay above 145. So there's your zone where you like, because the longer it stays above these numbers, these things will curl up and start going. Now your RSI is at 47. Okay, you want that thing above 50. If it gets above 155, you probably get it. And these things will start turning up. So again, if you're specking on this, you got your buy signal already at 144, 146. And you certainly don't want it getting taken out now. So there's your lines in the sand as well, in my opinion, in my view. On the 1 month, you probably got an even earlier one here. Yeah, you've got an earlier one here when it got above 139 to 141. Okay, but this is a 1 month chart, very short, almost day trading type thing. Okay, so that's what you look like on that one. Now, this one here, everyone's going to be worrying about. You know why? Because there's two stocks in here that dominated, and one is called Schlumberger, and the other one is called Halliburton. And for some reason, it ain't going up. So that is pretty shocking to people, because when you're in the OIH and you hear oil's up $10 a barrel and they tell you you're losing 2.76% today, you're wondering why. I'm wondering why too. So basically, rather than wondering why, sometimes you get out of things and then you wonder why from the sideline. And then once you find out why is not a problem, you can always come back in. But if you are not that type of person, because here, obviously it just fell out of the blue here. If I'm imagining things, which I haven't done enough research, so I'm not imagining anything, but my gut says that Schlumberger and Halliburton are in many, many countries, and they may have exposure to Russia and Ukraine. But I'm going to look into it further. But I didn't like what I saw today. And when I don't like what I saw, obviously, I thought it was time to go to the sideline on this particular small sector of energy and see what the heck's going on. Because this is a weird price movement. And weird either doesn't last or it's followed by reasoning. So that's what we don't know right now. I don't know. Is there a great reason for this? Then the reason's not going to go away and these prices might keep going. But if you want to know something about technical analysis, I'll give you this. You bottomed out at 230, you ran to 252. If you took about 60% off, I'll bet you'd be around this number here. So if this is going to be a 1, 2, 3 formation, then we should not take out 236. So if I was in there, sitting in there, I don't want it under 236. And if it starts breaking back above 243, I would imagine that whatever news has come and gone, and it might be going right back after 252. I think that's what trading is all about, is levels of which you are willing to take risk and targets of where you believe they may go. That's basically what I think. Okay, and if I throw up Schlumberger and Halliburton, you'll get the idea. It's going to be same story. These guys got hit even worse, though. They're down 4% today. That's why I'm trying to say one of these things. Now they're steady after market, which is good, but this one doesn't look very good. And if you go look at a 5-year graph, it's a little bit extended. You'd want this thing to stay above, if you're in Halliburton, or if you're in Schlumberger, you want it to stay above 36, definitely above 32.30. On a 20-year graph, the reason it's interesting is that if it can stay above these numbers here, and particularly this one here, $32, then you have a situation where the RSI is at 49. This is on a 20-year graph. So if it gets going, this is a very bright future potentially for this thing. Very bright future. So I'm not bearish necessarily. I'm concerned. And the concern is that out of the blue, it fell pretty good. How much did this fall today? Just to give you an idea. It went from 39 down to 36 at some point. I had a 10% drop at one point almost. That's a pretty big drop. Halliburton, same story. Halliburton's down 4.2. These things were down even more than they are now. Now, on a one-day graph, it turned around at the end of the day. So if you are a day trader, you obviously might have gotten in here at the end at $31 and rode it overnight if you like, and see how it goes tomorrow. This is another one, though, that has a bright future. If it can now, are we going to pull back to 25? That's the big question here because it's kind of extended. RSI is at 53. Take above 35 and opens all this up. So again, I am not a non-believer of the energy business, but when prices are weird and don't look right, you get concerned, and it's better to be concerned on the sideline than when your money's tanking. Okay, ESTC. Elastic. ESTC. Well, obviously this thing hadn't been around a long time, so let's move it on into a year. And on the yearly graph, you can see it's very similar to a lot of the ones you guys are looking at. And what I guess you're saying, and I'll just read your mind because it's not that hard to read. You're looking at stuff that was way up that tanked. You're looking at things that look like they may have made a double bottom that are getting above the initial resistance zones. And you're trying to figure out, is it going to run or not? And obviously nobody knows that for sure. That's why they call it, risk taking. So the bottom line here is this thing has cleared its first hurdle in the 85-70 area and above, that's where it's above that hurdle. So right now, this thing got above it and ran into some resistance at 90. It is trading about 86 in the aftermarket. I really don't think you wanted much under today's lows, that's for sure. Today's lows are 84.77. So this is one you'd keep on a pretty short leash. How short? Let's look at the monthly. Yeah, it's a sloppy looking gray. See, I mean, when there's a trend, all the lines are pointing straight down. You don't have that here, and they're all crossed. You don't have that here. So that's what makes it a premature situation in some degrees. Okay. And that's why the action can get sloppy, where it jumps up and then comes right back down again. Because technically, moving average wise, this is not set up for a beautiful chart trend right now. This thing is a Dutch company, American Dutch company, founded in 2012 in Amsterdam, and it builds and manages SAA offerings for search, lodging, security, things like that, analytics use. So, and they're out of Amsterdam, so I can see why there'd be some interest in the stock. So again, used to be 190. It's half price. Obviously, that makes it interesting. If you're a believer in it, just put some lines in the sand you can sleep with, because, if you get tagged out at 85 and it goes back down to 70, that'll be good. If you got tagged out at 84, 85, and you had to buy it at 91, but it's on its way to 110, that's not so bad either. Let's look at JKS. Yeah, the solar companies are getting a bid, because obviously, it's making it look like if we depend on gas and oil and we have to deal with players like Russia, that is no future. So these people are all getting a bid. Also, they're getting short covering. Let's be frank. A lot of the stuff you're looking at, Tom, Dick, and Harry are all short or out. And if you have a high short interest and you get any news like this and you've made money from 66 to 40, unless you're a pig, you're going to cover. And the people that were pigs and didn't cover, they obviously are now panicking in on their covering. So that's why a bounce is not a trend. Okay, so be careful on some of these things that are bouncing. All right, I got a little bit of time here, and I'd like to go over some stuff. COP, is going to be ConocoPhillips, and it probably looks good because oil's up, and then Costco always looks good because people need to buy 5,000 rolls of toilet paper, right? Okay, so it's up today and it's looking good here because it got above its averages. So right now, Costco is a little bit of a staple. So basically, you are looking at staying above. If you're bullish here and you played for the pop, you want this thing to maintain 505 to 510. 505 to 510. That's your line in the sand. If you go long term, are you a believer in a reversion to the mean of any type? If you do, there's a lot more downside for this thing. Okay. If you don't, and you think this thing is bulletproof, then like I say, you take your shot and you keep it above 505, 510, and you see how far it'll run. See, this is why you use the averages, because you had a buy signal here where right at 472, and you just got another one here at 486. So, you want to buy the dip, you use this as a little bit of a line. Okay, that's why I like these charts, because they give me different time zones as time frames, different parameters, but they give me the idea of um, moving averages on different time frames. Very helpful. Okay, let's talk about hedging real quick, and then I'm going to go into some different stocks that I like, and then I'm going to present you a offer that hopefully you cannot refuse, just like The Godfather. So let's talk about hedging. Now I'm going to pull up some that I figure people are in because they're popular stocks. So let's take a look at Apple. Apple is a company that makes tremendous amounts of money. They got tremendous cash, and they represent it looked like about half of what Berkshire Hathaway is holding, which is kind of a big percentage for a portfolio. But at any rate, what does it look like here? When it goes all the way up to 180, and you're this far away, let's look at the 20-year average better. Okay, when you're up at 120, 180, and you know the 12 SMA is 150, and you know the 24 SMA is 130, and you know the 110 is at 110 at 36, you know you are extended, right? So the trees don't go to the sky, and you want to manage risk. Okay, now this thing doesn't go down very long, it doesn't seem like, but there'll be a day when it does. And so basically, if you wanted to protect your position here, what you would do is you would consider I'll give you a couple off the hand. One, and I have a detailed report on this, so I'm not going to get into all the details of this. I'm giving you a very brief overview, but you get the idea. Then you'd need more detail. You go out at 185 here, 182, whatever it hit, and you sell the 190 calls. Why? Because the 190 calls are probably going for a very fat amount, and it would still give you another $8 of appreciation. So you sell the 180 call and you buy the 170 put or the 175 put with the premium. So now you got parameters around your account. Let's say you had $1,000 shares, and at 182, you got about 182 grand. Okay. Now, when you sell the 190 call, you're agreeing to sell your stock at 190. Now you can buy that call back and roll it up and do all kinds of stuff, but just looking at the trade on its surface, you're agreeing to sell the stock at 190, which means you got another 8 grand you're going to be able to make before they call it away, right? On the downside, you have the right to sell at 175. Let's say you bought the 175 put because they both were even as far as premium. So now you got 175 grand minimum and 190 grand maximum until the options expire. No, now you're at 163 if you didn't do anything. So obviously the hedge would have helped you by the tune of about 12 grand so far. Now I'll give you a bigger example on something like JP Morgan, a banking stock. Jamie Dimon, everybody loves Jamie Dimon, right? All right, well, let's see if they love him now. Stock went to 170. Sell the 180 call, buy the 160 put. You have 1,000 shares. You'd either have 180 grand if you got called away, or a minimum of 160 grand if it goes down. Or you could do nothing and have 136 grand as we speak. Okay, and let's get a real big one for you, which is old Meta. I think they should have gone to Instagram. At least we'd know the name, right? Rather than putting a title on your company name where you have no idea how you're going to get revenue. People didn't like that very much. They didn't like the way you're spending so much money on something where you don't know where the revenue is coming from either. So sharing photographs, which was the core here, obviously is a much more popular thing to do. And that's why the company has 3.5 billion eyeballs. All right, anyway, you're up at 380. And again, you can see it is very far away from the averages. So you say, you know what? I'm going to sell the 480 calls. Now, let's say you have 1,000 shares of this. Now you got $380,000. Sounds like a lot of money. So you sell the 400 calls. That means your 380 grand could be worth as much as 400 grand, but it's capped at 400 grand. And you take that and you buy the put at 360. So now you've got 360 grand minimum, or you got 400 grand maximum. Or you could do nothing and now you have 200 grand. You get the idea why hedging can come in handy. Also, you can do replacement trades, which is another way of hedging, which is very popular as well. So we have a PDF file, and I've been doing this for decades. Obviously, I know the options in and out, and I've traded tens of thousands of these contracts. Okay, so I know how they work, and I know how they can be used to protect your equity. And if you are a retired person, you really are not in a position where you can go through a protracted bear market. Of course, nobody thinks that'll ever happen, but sometimes it can happen. And if you're in some stocks, they're not all assured to go back to their highs. You're not in bonds where they have a maturity date and then they pay you your principal back as long as they don't default. No, you're in a stock that has to go back to that valuation and that price in order to get your money back. And that's a different ball game if you're retired. So knowing how to protect your equity obviously makes a lot of sense, because everybody, has an opinion, but your statement is a fact. So you've got to be careful from time to time. And of course, when PE ratios get like they were in 2021 and the market gets to levels like it was in 2021 and interest rates are going the other way. And then, it's a situation where, the concept of it's and that stimulus checks are gone and the balance sheet's going to be run off, not really shocked that you're going to contract off of that, right? And that's why I say I don't have a vested interest and I don't have a horse in the race, so I can talk a lot more independently than others. Obviously, if you have a large stock portfolio with somebody, their opinion is going to be different than somebody who doesn't own all that stuff, right? So my opinion are my own, but this drop is of no surprise to me. So anyway, just gave you an idea on that. So the PDF file would be helpful in that it goes over ways of hedging upside risk and downside risk. Now, if you were at a point where you just couldn't take the pain anymore, you lost half your money down here, what's your risk? Your risk is if you get out, it's going to go back up. Well, in the PDF file, I go over how you can address that risk in a limited risk fashion. Okay. So that's another way of hedging upside risk. Because, there's risk all over this place. I mean, that's what the markets are about, in case they didn't give you that brochure when they opened your account. There is risk in all this stuff, right? So bottom line is that, and, the bond market is probably one of the most overvalued markets in the history of mankind because of the inflation rate where it is and the yield where it is. Okay. And you can see when people, and you've seen in the past, if you have any history, that if the veracity of the issuer comes into question and you're at an extended price of tremendous amount, a lot of the bonds are a dealer's market, which means what? They're not traded on the exchange, they're traded between dealers. And that's what causes a lot of the freeze, because the dealers don't want to put up their own money to buy falling markets. That's why the Fed had to come in 2020, because everyone wanted to get out of fixed income and debt, and there was no buyer. So the Fed had to be the buyer because they print money to buy. Anyway, that is again, the way you would protect or hedge yourself against a rising market. So this PDF file is very, very valuable in my view, because again, it was put together with a lot of thought, and it takes all the knowledge and experience that we've got, which is substantial, and we put it into something that is helpful to you. All right, I'm going to go over a couple of things, because again, I don't like things that are going down. So I'm going to show you some things that we've been focused on that are going the other way. First one's Cleveland Cliffs, industrial metals. Okay, we got into this thing here once it broke above 15. We got keen on it. Okay, and as you can see, it's looking pretty good. And look, if it gets above 30, how much real estate there is there? Quite a bit. And where's your RSI? Your RSI is at 58. Okay, taking a look at the 5-year. Again, it was going up nicely, right? Pulled back. Then it got back above the numbers. So as long as it stays above 20, 22, 21, and 20, this thing does look good to us. If it doesn't, it's not illegal to get out and come back in. If you were up here and it breaks down here and you get out, or you're up here and it drops under here and you get out, Listen, if it gets back above 22, 23, as you can see from the long-term graph, it could be going a long way. So don't get into a mentality of if I sold out something lower, I can never buy it again, because frankly, that's very flawed. Okay, so that's what we're seeing here on Cleveland Cliffs, industrial metals. Another one, industrial metals over there in Brazil. Brazil's starting to come on. They have a surplus budget over there, I guess, is what the guy was saying. And their inflation is supposed to come down dramatically. So is ours, but I don't see it, right? Okay, so here you go on VALE. We got into this thing on a break above 14. That's when we turned positive. And then we basically are saying it got positive again on a break above 1750. And this thing, if it breaks 24, it's got a room to go as well. Industrial metals. Then you've got precious metals. Okay. Again, my experience with the markets is when inflation's at 7 or 10% and the interest rates are way down at 1 or 2%, that's an environment that should be very favorable to the gold. You throw in the geopolitical, that should be favorable. The only thing that you could say negative is obviously that the dollar is strong, but if they have to do QE expenditures to make the balance sheet grow rather than contract, maybe the dollar would get into some vulnerability. At any rate, take a look at here. This one looks pretty good. On the precious metal front, again, I'm just showing you a couple of examples on some things. Okay. This one here, very good to us today. Loved it. Pan American. And this guy, look, up almost 10% today. And does that look like it's getting ready to roll? Looks to me like it might be getting ready to roll. So that's why we're focused on it. That's a silver one. And then, of course, you got some gold ones up here. These guys got into some new areas for gold. And so I think their reserves increased quite a bit. So once it broke above 10, it was a buy signal. You can see above 10, and now it's way up here. And if it gets cooking even further, a lot of real estate there. It's a little bit extended here, but it's been pretty good. And one that isn't as extended is Barrick. And you can see that's just getting out of there. And this one here, I brought to people's attention at $52, $54 when it was only when it was paying 4% dividend, 4% dividend and $52. Look at it. You see where it hits the line here? That's where you want to load the wagon, right there at 4% dividend. Now you're getting paid for 4% dividend, and look at the movie. Beautiful movie. So again, there's two things that we're going to show you here that's available, okay, through the Option Professor. One is a PDF report that goes over hedging, how to use calls and puts to protect your assets against market declines, or gives you protection against a market advance. That's called a replacement trade. And I go into great detail in this report, and this report is very, very, I think, very, very important. The second thing that we've got is we've got a report on our best ideas in energy and in metals, both precious and industrial, because in our view, for the last 3, 6, 12 months, that is where you should be and not much anywhere else. And as you can see from the board, if you look at your statement on the screen, some things have green numbers and some are red. And what you're trying to do is get green on the screen. And so the bottom line is that now this stuff is extended sometimes. That's why I didn't mention Newmont, because I think it's a little bit up here a little bit, but some of the other ones are not extended that much. And if the gold is going to go on a run, it's always an if, these are the ones that we are focused on. But if the news changes, we're not attached. We get out, we'll cut and run. I'll change my opinion. Okay. And that's what you do when you're trading. If the circumstances are still favorable and the prices are still favorable, obviously let it ride. But if things change, again, you have to change. But again, the backdrop that we have now is not bad. And so that is something I think it would have value. And we've got a couple of these gold and silver stocks that are under $10 and under, well, right around $5. So there are some cheapies out there that if these metals were to run, they could actually have some pretty good legs. Again, there's risk in everything, so you got to realize that. but our opinion and our view is we have identified our best areas, our best stocks in those areas. So if you'd like to get educated on the hedging situation, you simply go to optionprofessor.com. You can put your email in and your information in there. If you'd like to talk, put your phone number in there. And then basically I can explain how these PDF files work, how they get to you. They go right into your inbox. You know, obviously we talk about how they work, and then we get them right into your inbox. And then we do have a situation where we can send you some additional technical data. And if you have any questions, we can have a brief Q&A on some of the information that you received. So if you have any questions on the educational material, more than happy that we could cover them, and we could have a brief Q&A as well. So there's a lot of value to the PDF reports, both on hedging and on the energy and the mining companies. And there is a value, of course, into the Q&A, because I've been doing this a long time. I've got a lot of experience. I have opinions and observations that I'm willing to share. And basically, we don't give any advice. That's up to your brokerage firm and your broker and yourself. So we're not in that, but we are in the education business and bringing our opinions to people's attention. Okay, so optionprofessor@gmail.com. If you'd like to shoot us, excuse me, that's if you want to shoot us an email, optionprofessor@gmail.com. If you'd like to go to the website, it's optionprofessor.com. And again, option is singular, OPTION, PROFESSOR. The markets obviously are getting very wild, but I'm not very unhappy with them, because if you have a lot of cash and prices tank, you're not in a terrible position. And if you're in treasuries, rolling short-term treasuries, the bond market's not hurting you. Now the bond market's going to have a nice little pop here, because that 0.5 point jump in the Fed funds rate is off the table, it looks like, and everybody was leaning that way. But we don't know what the future holds here. It's going to be a lot of uncertainty. We do know inflation is way out of control, and we do know they are way behind the curve, and that's not an if. But if they go slow, then you could have a very big second half of the year, because again, Tina, there is no alternative to stocks, comes right back out of the woodwork. So I'm on top of this thing every day, and the Option Professor is more than happy to speak to you. So again, send over your information, optionprofessor@gmail.com and optionprofessor.com. And you can input your information there. And I look forward to talking to you guys and see if I can help you with some of our opinions. And maybe you could give me some of your opinions. It'd be interesting to hear as well. Okay, thanks a lot for being here today. This is Option Professor of optionprofessor.com signing off. And of course, we'll be back with you soon. And good luck and good trading. And again, to get the PDF reports, just let us know. Okay, good night, everybody.